So to start things off, I wanted to map our audit objectives to the scripts. And I figured a good way to start out, though, is really to say that a lot of the revenue tests that I've done are more focused on fraud as opposed to error. And while there are some error points, and we'll talk about that, I do feel that these top revenue tests tend to be more fraud based. The ACFE has a classification system which you can see over on the left hand side. It's very, very small in the slide. Now, the only ones we really care about are the items that I've taken out of that classification system, the financial statement type testing, as well as, well, and there's probably maybe another one in there, but I really took out skimming, and skimming is where a person is misappropriating money or cash before it gets into those books, and it may be something where they've unrecorded, the sale, or they have understated the sale in some way, and then there's a bit of things that you do to conceal what you've done, which usually takes place in a bit of the sales and receivable area to steal the money. But asset and revenue overstatements, as we go to our next slide here, you can see up at the top here from a frequency point of view that financial statement fraud is very low from a percent of cases, and that's that top left screen. Now, the percent of cases is very, very low. However, asset misappropriation, skimming being a big part of that, is something that's very high, because I guess it's a lot easier just to steal some cash or inventory or what have you, than it is to enact a large financial statement fraud where there's a lot of people looking at that, and we'll talk about that in a second. Now, from a size point of view, median loss, which is the top right, you'll see that asset misappropriation is kind of low. I mean, it is still, a nice salary to someone, I'm sure, but yet still quite low when you're looking at a financial statement fraud. Financial statement fraud is into the close to 2 million on median loss, whereas asset misappropriation right now is about $100,000. Interestingly, going downward, these median losses. So we must be doing something right, or testing for it more, or maybe in 2012 the study will show more because the economy has been a little bit slower. But anyway, when we look at those asset misappropriation schemes, they don't really break out financial statement fraud for revenue in this study, the report to the nation that the certified fraud examiners put out, but they do track asset misappropriation, and you can see there that they've tracked skimming and noted that 14.5% of the time people are kind of stealing money from revenue, and that's, of all the cases reported, that's what's coming up. So it is a high percentage. It's like 15% of this 90% or so. So it's probably like 10-12% of all fraud is skimming. So it's a good area to go take a look at. And while you're there, you might as well do financial statement fraud testing. Taking a look at a recent COSO study as well. I mean, this just came out in 2010, and I put that link there, which I did get off of Google, but it should get you to what you need. And it's a PDF document, and I highlighted a couple of things. First off, when it is a financial statement fraud, it tends to be the CEO or CFO had some involvement, 89% of the cases during that time frame in 2000, I think it was like 1998 to 2010, versus it's upwards than what it was from 87 to 97. Now, the most common fraud technique is revenue recognition, and just not setting up that revenue recognition properly, which, again, going back to some of that ACFE work, it could be something where they've overstated the revenue, or there's a timing difference. Then it's followed by the overstatement of assets and etc. But revenue fraud's accounted for over 60% of all cases versus 50%. So it's an upward trend. It's something that is a large financial statement category for fraud. And again, why I spend a fair amount of time from a fraud perspective. So in the revenue test set, there are the 5 audit objectives that I laid out. And again, these, if I didn't say, these were developed back in 2006, so it's a few years back. I urge you to take a look at AuditNet and all of the audit programs. As we go through our audit program here, I urge you to take a look at the ones that AuditNet has, as I bet you can come up with even better objectives and more extensive detail as to what you're trying to do for your specific situation. But I tried to create a bunch of tests, and we'll be going through those tests today, that cover error, cover fraud, and do so in a more generic fashion so that it could be used across any organization. So let's go through these. The audit objectives at a high level is just, first off, is that process working effectively and efficiently? And I think that that's where, in the beginning at least, from some of the tests I'll show you, we're taking a look, are we billing everything out? And there are people out there that will actually track how much money are we leaving on the table by not billing the appropriate amount to customers. Next, we'll determine whether or not this is authorized. Should we have authorized that sale to a customer? Are they over a credit limit, as an example? Is the pricing proper and all of that for that particular sale? So that gets into more approved pricing, which we'll talk about. And then, we're going to talk about accuracy and completeness. And we are going to do some testing there around the timing difference, as well as just averages, and taking a look at, what looks reasonable for that particular customer in the sales cycle. Fourth, accounts receivable balances are properly valued and presented, and we're probably all very familiar with doing confirmations to potential customers to determine whether or not those balances are valued and presented well. And normally, which we won't be talking about today, but it is in the book, there are sampling techniques that you can use there, and a lot of times monetary unit sampling, which ACL does quite effectively, can be done on these types of tests, and it's a very good thing to do to complete a statistical analysis of the accounts receivable. I guess the theory is, if your assets are right, if your balance sheet is dead on accurate, more than likely the income statement is sort of a fallout, and that's, I think, why auditors in financial statements tend to audit the balance sheet a lot, and accounts receivable would always get a very tight auditing. I threw this last one in there. Audit trails are maintained for timely information to decision makers. I mean, it is part of COSO when you look at the information and communication portion of COSO, the control objectives that we have there. So I like to throw that in there, but it is something that people question me on sometimes and say, why did we include that in our testing? And I do feel, though, it is a good idea, especially from an ACL perspective, because I do feel that in a lot of ways, we won't be able to complete a very good ACL test if we don't have a very good audit trail of that information. And hence, I like to put that in there and, urge everyone to take a look at the revenue cycle of your companies and just determine, can we calculate properly sales prices and total values and etc. Is it easy, or is it something where, it requires a supercomputer to complete these types of joins? It really shouldn't. I mean, it should be something that is simple and something that should work quite effectively.